So today the job is to take a quick run through my Trading 212 investment account. This is the one I share with YouTube. I'm quite happy to document all the ups and the downs. More downs than ups these days, but let's have a look at how I've been doing for April. Just remember that nothing in this video constitutes financial advice. This is for information and entertainment only. Hello again, David here from prettypenny.club. I make videos on passive income investing and making your money work harder for you. Subscribe if that sounds interesting to you. So in this video I would like to talk about my Trading 212 stocks and shares account that I'm sharing with YouTube and the internet at large. It's been a strange couple of weeks. I have been busy buying plenty of stocks and shares. The last couple of weeks we have seen something of a resurgence in the market. Why that is, I'm not quite sure. There hasn't really been an awful lot of good news, but nonetheless, let's just get straight into it. Let's have a look at what I've been buying and how the account is faring. Okay, let's get into my Trading 212 portfolio here. Just some of the headline figures here first. Overall, I have invested £3,035 thereabouts. My portfolio is currently worth about £2,800. That's a loss of £235, give or take. This is a live capture of my screen, so the figures are going to fluctuate around about 7.75%. So this month, my portfolio has gone from being worth around £1,977 to £2,800. And this month I have invested £674.64. Let's see what I have been doing with that. The first thing I did was to buy 32 more shares of the Renewable Infrastructure Group. That cost £38.33. I have averaged down on my price here to £1.33 per share. The Renewable Infrastructure Group are of course a renewable energy company investing pretty heavily across Europe. I would encourage you to look at this company if renewable energy is something you're interested in. Always do your own research. That's not a recommendation to buy, but I certainly like them and it's a position I would be trying to increase as the weeks and months go by. The second company I bought is a new company for me, and that is Colgate-Palmolive. I bought 4 shares for £206.35. That's a little bit up. As you can see, I bought them, it seems, at a pretty good time, and I've seen a slight rise in that valuation. So Colgate are a company that are in everybody's household. Basically, if you open your cupboards or your bathroom cabinets, it's quite likely you're going to see some products there that they make. So a slightly more defensive share probably. In this particular downturn, people are still buying their products, and they're good, solid company, the kind of company you might want in your portfolio going forward. Next thing I did was buy 40 more shares in Aviva for £107.25. This is a UK facing insurance company, asset management and services. Again, averaged down in my position here to £3.18. It's another one very much for going forward. That could probably get worse before it gets any better, but definitely an investment for the future here in the UK. Next one I bought was another new company, Unilever. Again, much like Colgate, you probably have a lot of their products in your house. Again, quite defensive for this sort of period we're going through, but hopefully once we get through this downturn, we're going to see Unilever pick up once again. Unilever, my 3 shares cost me £119.71. Next thing I did was add to my National Grid holding. Everybody needs energy. Everybody needs electricity. I don't really see National Grid going anywhere. And again, bought this company sort of in the pit. And I have seen a slight rise in my holding there too. National Grid, my shares cost me £103.84 for 12 shares there. And the final company I bought this month was Lloyd's. banking group, I added to my position there. I added 310 shares for £99.16. Again, this is one that's quite likely to struggle in the near term. The full picture for the UK economy in particular isn't really sorted out yet. What with Brexit, the continuing pandemic, there's an awful lot of incomplete information, shall we say. But Lloyds have a good balance sheet, have plenty of reserves, and I really expect them to pick up once everything begins to clear up here. So again, that's one for the future. Let's say 2025 to be sure. Disappointing piece of news for my portfolio this month was Luckin Coffee. Wow, look at that. Luckin Coffee down 85%. And that's because after an internal investigation, they were found to have fabricated their sales figures. Their growth, their success hasn't been anything like what has been reported. And unfortunately, that doesn't do a pick of good for your share price. Quite unbelievable, really. They were touted to be a rival to Starbucks, but really, Starbucks' price rose on the bad news for Luckin Coffee. At the moment, their shares are suspended. You couldn't buy or sell them if you want to. At an 85% loss, I guess I'm just going to have to hold on to them at this point. I put £100 in a couple of months ago. It has not worked out at all for me here, so that's just going to be a bit of a stain on my portfolio for some time to come. A little bit of good news. Seagate, the hard drive company, paid me a dividend this month of £1.97 for my shares. Fantastic. Nice to see a dividend come in. It's certainly interesting to see that the companies that I bought at the lower end of the scale are the ones that are doing quite well. And it just goes to show if you can find some spare money to buy shares and stocks during a downturn, you're going to get yourself into a position of strength going forward. I always think long term. So if I can buy these quality companies at any kind of discount whatsoever, that's what I'm going to be doing. Playing the long game here. And I'm very pleased to have the companies in my portfolio that I do. So once again, around £674 spent this month. Portfolio is worth about £2,800. And I look forward to adding more companies for the rest of the month and into May. So what happens next? The past couple of weeks have seen something of an upturn, which has prompted an awful lot of speculation that things are going to get a little bit better from here on out. The Prime Minister has been into hospital, into intensive care and back out of hospital again. And when world leaders are in any kind of period of transition, be it through ill health or through a change in government, stock markets tend to get jittery. And we haven't seen any jitters here in the UK from Boris getting sick. But in saying that, there hasn't been an awful lot of good news either, and it's a bit strange to see the stock markets rise quite so aggressively over the past couple of weeks. Same thing in the USA, currently debating another stimulus package, and there's record numbers of unemployment, and yet still the stock markets continue to drive higher. That's probably based off very low interest rates at the moment, but it just goes to show nobody really knows what's going to happen. In saying that, the picture is far from complete. There's an awful lot of information that we don't fully understand just now that's coming through. We don't know how long this pandemic will last. We don't really know, if we're honest, how it's going to affect the economy, how long lasting it's going to be. So I wouldn't be surprised to see a dip either. The fact remains, nobody really knows what's going to happen next. I'll be continuing to invest one way or another, whether that be in stocks and shares, maybe overpaying a mortgage, or just buying more of my favourite index tracker. It will be a cold day in hell before I let my money rot in a current account in a local bank where they're paying absolutely derisory rates of interest. I would much rather have my money out there doing something, working on something, so that maybe 5 to 10 years from now I'm going to see a huge benefit from doing that. So that's it for another video, folks. I'd be delighted to hear from you in the comments. Let me know what you think of my portfolio now. If you've got some ideas, I would love to hear those. If you just got any comments on the video, anything at all, leave one down below. Hit that like button. It will really help the channel grow, and it will help YouTube push this video so we can get the investing message out to as many people as we can. So thanks very much for watching, folks, and I will see you in the next one.